Hey everybody, this is Lynn Marape and Alan Walker. Welcome to the FinTech podcast, your one-stop shop for all things FinTech and YDPay. Today, Alan will be talking to us about the geopolitical factors that influence cross-border finance, such as trade agreements, economic sanctions, and political stability. So, starting us right off, as the saying goes, no business operates in a vacuum. Geopolitics plays a very important role in determining financial flows and transactions. So, Alan, do you mind telling us about how it impacts the fintech industry as a whole?
Yeah, great question again, Lynn. I think that outside of Africa, with the exception of probably Ukraine and the Russian war at the moment, that's for the first time been on European doorstep. Globally, it's pretty consistent. Banking laws in one European country are very consistent with another European country. Africa,
Mm-hmm.
once again, TIA, this is Africa. It's a
Yes, it is.
completely different ball game.
Yeah.
Starting on the southern tip, just a very good example is South Africa and our relationship with our immediate neighbors.
Okay.
We form part of what's known as the SADC region, where, a good example, we've actually got two countries within South Africa. But
Yes, we do.
we're supposed to have these amazing, political relationships with the likes of Namibia, Zimbabwe, Botswana, Mozambique,
Yes.
Lesotho, Swaziland. But the reality is, even though we've got all these agreements in place, something as simple as moving South African rands from South Africa to Mozambique, where you
Yeah.
could drive a suitcase over the border easier than it is to do it through our banking systems. Not that I'm advocating that; that's highly illegal. But it becomes very sad that many of these, call it political steps, get in the way of what's supposed to be African by our very nature. We have a massive influx of workers coming from these countries. They need to send money back home. Many
Yeah.
of them are unable to open bank accounts in South Africa. So the only way that they generally find ways to get money back home is either through an illegal or black market trade, finding a street vendor, giving that person 100 rand. He phones his mate in Zimbabwe. That person hands over, a couple $100,000 dollars, whatever the exchange rate is at the moment.
Right.
And no one's none the wiser in terms of, one, transparency to our government in terms of true reporting of inflows and outflows. But more importantly, the poor individual trying to send money back home is
Yeah.
obviously impacted by this restrictive method that we have in this country. And that, call it that model, is evident everywhere else in Africa. Most countries go through an election, call it every 4 or 5 years.
Mm-hmm.
Every year on an annual basis, there's a number of African countries electing new leaders. They come in with their new sets of promises, with new regulatory changes. And all of a sudden, like we have in Sudan at the moment, and in Niger, where governments have been in power for 6 months and then they get toppled over by military, and then the status quo gets reset again.
Yeah.
Sadly, the rest of the world doesn't get to experience that on a day-to-day basis. And from moving money around the continent, that it just makes it incredibly difficult. It makes it incredibly challenging. And unfortunately, this is ultimately impacting the people of Africa. As I used that example where people are having to revert for illicit or black market trading mechanisms.
Yeah.
It makes it quite difficult for everyone to play on a level playing field. Tied very closely to that geopolitical nature is some countries have a very wide open, call it, regulatory framework, allowing new entrants into the market, allowing technology to really dictate where a country is possibly moving. And we've seen this a number of times throughout African history. Mobile money is probably a perfect example of this. Whereas in Central and East Africa, the likes of Kenya, Nigeria, Tanzania, Ghana, citizens of those countries have moved away from what we call traditional banking, and their funds sit on their mobile device. They use that to pay for everything from their taxis to work, to their groceries, to the rents, to sending money to friends and family.
Right.
Whereas what's called the kind of the pinnacle of African technology here in South Africa, mobile money just never took off. I think Vodacom, MTN tried. They spent millions of dollars in terms of marketing and trying to off the ground, and it just failed. It failed for a number of reasons. Some of them more than likely would have been political in nature. We don't have the operating environment that allows banking entrants to enter as quickly and easily as say you can in a smaller or call it Central African country. So yeah, the geopolitical landscape in Africa is probably our biggest challenge. But at the same time, because Africa is young, I think we are definitely on a path where it's just a matter of time before the elected leaders are younger. I think it's probably a hindrance to Africa as well, where our leaders are sometimes in their 80s and 90s. And to expect them to drive technology, to expect them to drive innovation, it's not part of that older generation. Whereas when I say the younger generation, probably younger than me and you, Lynn, where they will use a technology one day, use another technology the next day, and just move on to something else by the time the second week comes from.
Right.
My parents had the same bank account from when they were 18 and working up until when they retired and died, 30, 40 years with the same bank account.
Yeah.
Our generation and younger, they'll swap and change. The brand loyalty is kind of a thing of the past. And that's also both a blessing and a curse. It allows new entrants into the market. And I think it's just a matter of time before Africa gets a couple of young leaders to start driving this innovation. And we're seeing it. We're seeing the likes of Kenya, their rapid adoption of IT, becoming one of the biggest outsourced IT development centers in the world. So it's coming, and I'm particularly excited about it. All we need to hope for is that politics doesn't get in the way of the next generation.
Yeah, definitely a lot to unpack there. And, something that stood out to me was this whole dichotomy between the young generation and the older generation, because, there's a lot less neuroplasticity, if you will, amongst the older generation where, change is kind of feared in a way because you don't know how things are going to play out. And I think that could also speak to the fintech industry as a whole, because as you've mentioned a couple times before, that it is ever changing. One day you are selling, chargers, the next you're actually selling, mini inverters, if you will, and just adapting to the ever changing environment. But I was actually curious as to why, mobile money didn't take off in South Africa, especially because, as you know, we have Santin, which is the richest square mile in Africa. I'm not too sure if that is still the case. Maybe it's still the case. But, you would think that innovation is going to be the end all be all, the main thing that business developers strive for. But I guess you did make it a point to say that, yes, there are these creative individuals, innovative individuals by way of business entrepreneurs and things like that. But if the government isn't on board, then maybe that kind of bleeds out into how the society as a whole functions. Is that something you would agree with?
Yeah, I definitely tend to agree with that. Yeah, so with a significant proportion of the population relying on government grants, sadly, it is the case. We've got probably one of the highest unemployment rates internationally. But what this also means is that percentage of the population that historically was unbanked or would potentially be a good fine for mobile money or mobile transactional systems is forced to go down a direction in order to receive their funding on a monthly basis. Um, you spoke of Santon being, call it one of the richest per capita of anywhere in Africa at the moment, and I think that probably was true up until COVID. Recently I've spent quite a bit of time up in Joburg.
Okay.
There's a lot of open office space at the moment, and also I think it's tying very nicely into Africa, where the ability to work for somebody 600 kilometers away from you, 1,000 kilometers away from you, 10,000 kilometers away from you is a very
Yeah.
real reality.
Yeah.
Um, and ultimately, the driving force behind that is one, Africa is incredibly highly skilled, and we've still got some exceptional schooling, some exceptional universities on this continent.
Yeah.
And if we can see that education and that global landscape becoming part of the local geopolitical landscapes, I think it can only be good for Africa. And when I say good for Africa, I'm talking about good for the citizens of Africa. I think it'll be, call it our next generation will see the ability to live and work anywhere in the world.
Yeah.
And it's definitely our time. I think we're very bad at marketing ourselves, as marketing us as individuals. And you see it time and time again. Africans will go work in London, and the locals are just so impressed by the work ethic, by the rate of work, by the quality of work. And it's slowly, since COVID, we're seeing that definitely expand out. What we do need as an African continent is for the geopolitical and the political landscape to allow for that adoption. Having a telecommunications environment that is expanded throughout the entire continent with cheap data, fast data. It's a direction we need to go. And once again, that becomes a hindrance if regulatory tape stops the ability of even the big service providers being able to roll out telecommunications equipment to some of the rural areas.
Yes.
And that's something as simple as getting a cell phone signal in the middle of Africa could be held up by political red tape. We're not even at the point of discussing how to pay that individual, yet that person can't make and receive a basic phone call. So politics play a very, very big role on this continent.
Yeah, I can imagine. And, I'm sure even though you've shared a whole host of insights with us, that is only just touching the surface. And as you were speaking, COVID kept coming up, and I just made a mental note of, us creating an upcoming episode about COVID and how it actually impacted just the fintech industry as a whole. And I love how you made it a point to draw this synergy with the fintech industry and telecommunications as well, because that will cut out the illegal trading that you were talking about, insofar as those individuals, especially in rural areas, not having that financial literacy, not having those bank accounts, even though they are earning money that they're able to send to their loved ones. So yeah, definitely a lot to unpack. But before we carry on with this conversation, I think that would be a great time for us to take a little bit of an ad break to hear from our sponsors, YDPay. Do not go anywhere. We'll be back in a second. With over 15 years experience in African solutions, YDPay sources the best rates without hidden fees, all while ensuring that your data is secured and protected within their global technology stack. Built with the best-of-breed technology solutions with inbuilt compliance, banking, and reporting frameworks, YDPay's service-based framework provides multi-currency pay-in and pay-out solutions for both fiat and blockchain solutions. Getting started is as easy as 1, 2, 3. Register on the YDPay platform, upload your identity and residential documents, and voila! You're ready to send and receive payments in 40 currencies. Sending and receiving money has never been this quick and easy. So what are you waiting for? Start transacting today. This message is sponsored by YDPay, the safest and easiest way to connect with Africa. Now, back to the show. And we are back. So, Alan, have these geopolitical factors impacted YDPay's go or no-go decisions for the territories that you either currently cover or plan to cover?
Yes, definitely. So there's two, call it distinct processes we undertake as an organization. The first one is any sanctioned country we actually are prohibited from doing any transactions with, both receiving and sending. Unfortunately, those sanctioned countries are often as a result of the very political nature of those regions.
Yeah.
So, for example, a country like Niger at the moment, going through a massive, call it government replacement by the military. It's almost impossible from an international perspective to get funds in and out of that country at the moment.
Yeah,
so
understood.
No matter how secure that financial transaction is, how trusted the sender is, how trusted the receiver is, at this point in time, you're very limited by what you can and cannot do within that country.
Mm-hmm.
At the same time, there's obviously legal restrictions to the types of payments we can do. South Africa's once again one of the most regulated financial systems in the world. Something as simple as paying for an import or exporting out of the country has a significant amount of financial red tape before that transaction's even released.
Yeah.
So a new entrant into the market becomes very difficult to do it outside of the banking systems. And at the same time, what's good for the goose is good for the gander. We're seeing the Reserve Bank start opening up to the fintech space. We've seen the Financial Conduct Authority to start engage with the next generation payment systems such as crypto and the blockchain. So we're seeing it. It's not moving at a pace that I suppose the fintech would like to see, but we're definitely seeing that happening. Then at the same time, the restrictions are, they can be at the country, they can be at the type of payment. They could also be a combination of source and destination. So certain countries may publish a rule that they don't want to do any work with, I don't know, Nigeria. They all of a sudden black mark Nigeria or grey list Nigeria, and it becomes quite difficult to then complete transactions from other certain jurisdictions. And it's not just an African problem. The United States has a very complicated financial system as well. So whereas we spoke about Africa needing to be open to each other, in the US, you could get a financial license in one state and not be authorized to conduct any transactions in another state. And that's one country. We see it limited to a degree in Africa at the moment. But from our side, we will always at a first point operate in a, call it, when I say a safe country, I'm talking about a country with appropriate regulatory controls in the financial system. The same laws and regulations that all the banks need to adhere to, we need to be conform to those as well. And it's really to make sure that funds can be trusted, that we can be trusted with funds. If we operate with the same set of laws that the big banks operate in, it ensures protection for everyone in the ecosystem, even though we can do it quicker, faster, and more secure than some of the big players.
Yeah. I mean, there are obviously a host of things that are out of your control, and I'm sure you can attest to the fact that, in a perfect world, YDPay would be able to provide the service to every single country within Africa. But, you have said that you are working with the best, specialists in the game insofar as making sure that you adhere to the various legal restrictions and regulations of each different country that you do serve. So would you say that geopolitics, in relation to all the rules and the regulations and the different laws and, the political stability or lack thereof is YDPay's biggest challenge in terms of just attaining that bigger goal of serving the entire continent.
Yeah, I definitely think it proves to be a challenge,
Okay.
but at the same time, it's probably our biggest asset as well. So we've always, adhered to I don't even want to call it a slogan, but, built for Africa by Africa. Our entire team are based here in Africa. We've lived here all our lives. Wherever possible, we engage with other African entities. And the reason we do that is because this is Africa. These challenges that come up on a daily and weekly basis, unless you live off the land and you drink our water, it becomes part of your culture, and you start to anticipate the next set of challenges and work around that. And that's why I said it's both the disadvantage and a challenge, but at the same time, it's probably our biggest asset. Because we know it's coming, we know what Africa looks like, and we ride this journey together with our African partners, with our members of state, with our regulators. They come to trust us, we come to trust them, and ultimately, we're doing this for the betterment of Africa. We built this solution to give an option for every citizen of the continent. So if you don't have a bank account, we have solutions to get funding to you from your friends and family overseas. If you have a mobile money account, we have a solution for you. If you have an actual bank account, we have a solution for you. And that's ultimately what differentiates us from everyone else out there, where we are truly agnostic in the African ecosystem, and we intend to be part of this journey for as long as we can, providing access to financial systems for everyone on the continent.
Yeah, honestly, that is just the perfect way to end this. I really love what you said about being built for Africa by Africa, and just speaking to that general sentiment of creating that financial inclusivity, which we actually spoke about last time. If you guys haven't checked that out, please do so. But yeah, I love that you guys, everybody, working for YDPay, with YDPay as well, arguably has that first-hand experience and always just has that customer at the back of their minds, because already that Africa is, for the most part, a young generation, right? I think we have, of all the different continents, we have the youngest generation as well. So just that forward thinking is definitely what's going to help you as YDPay stay ahead of the trends, while also making sure that you are adhering to the customer's needs, whether they are a business owner, whether they are, somewhere in the rural areas, or, even living abroad as part of that African diaspora that is sending money back home as well. So yeah, that was just definitely enlightening. And I love the fact that you saw that the geopolitical influences as not only a challenge, but actually an opportunity as well, that kind of thinking.
Part of our ecosystem. Yep.
Exactly. It's
part of our DNA. Yeah.
Exactly. So, guys, without further ado, thanks for listening to FinTalk with Alan Walker and Lynn Marape. I hope you enjoyed our deep dive into geopolitical impact on cross-border finance. That's all for this episode, everybody. See you next time.